Welcome to Beyond Profile. Today's October 18th, and it's 2 weeks from when we last talked about the probe failure on the daily balance area, that we would go out to see the other end of this. And here we are 2 weeks from that time period, and we are lower this morning, below yesterday's lows. We're actually losing the monthly point of control here, which is at 91.50s. This is coming on the heels of Goldman Sachs earnings that were just released here pre-market. This market, very fragile, very news driven by what's going on in Germany, the European zone, if you will. And yesterday Merkel came out and said it wasn't going to be a quick fix, and this is sort of kind of what pushed us the whole way up, is that they were going to come up with some sort of a plan, or a plan to come up with a plan to fix the bank woes over there in Europe. One of the first things I think we need to watch for this morning, obviously, would be is to see if we can hold this rotation. Now, when we talked about this being a probe failure 2 weeks ago, we said that we would come out the other end and test 1224s. If you look at a 24-hour chart from Sunday night, you'll actually see that we did trade as high as 1330 on the S&P market. Yesterday we actually opened back up inside of Friday's value area, so it gave us a chance for rotation inside of Friday's value area. Rotated all the way through the lows and then out the bottom and closed at the lows, and now we're getting this continuation pattern here for the move this morning, down. When, like I said, Goldman came out, this broke us a little bit further here this morning. So one of the things that I'm going to be watching for here would be a little bit of a larger time frame P formation, if you will. I'd like to see this market kind of hold in something that would look like this here. This would be our vertical move, our stopping price, and we start to get development around this area where we're getting acceptance, if you will, of value in the marketplace. All right. That's what I would be wanting to see here, if we could get that to be fulfilled in the marketplace. And if it breaks, obviously, below these lows, then we're looking at 1157, which is the huge composite node for the 3 months, which is 57's right here on the chart. So 57s is what we would be looking for on that. If it got down to that level, it could cycle all the way down. Actually, we have a gap, right? We also have that gap. You got 55. 50, 57, 50, so you have gap fill and the composite high volume node. So that would be a huge area for us in this market for a technical gap fill on the ES. So if we don't hold in this area and above the monthly point of control, because this could still be a probe this morning, even with them opening it lower here, we've probed down to about 85.50s. And if for some reason we get back above 91s, then we can auction a lot further back up, and this could set the stage for the balance area or acceptance of value up here between 1180s and 1220s, where then in fact we could continue to move higher. Remember, this would be a new stage 3 within this B formation on the daily, and then if we break, we can break a lot higher from here. So, and again, 2 weeks later, here we are, just like we expected, testing the other side of this thing. Now what, right? Do we come all the way back down? We could. We could easily come right straight back down. The imbalanced state here is very clean. There's not a lot of demand in it. It was choppy trade all the way up. We didn't build a lot of structure in there anywhere, and we could easily just come right straight back down the whole, the whole chain back down here and break all of those levels again. There will be a few key areas, like I said, the 57s to this gap fill, 55.5 would be an area that we would definitely look for some sort of a technical bounce if in fact we got down to that far. All right. So this morning, obviously, you're going to be looking for back to settlement, which would be 1194 area. Markets could get back into that area. You would look for somewhat of a pseudo gap fill, if you will, because remember, you're opening, and then a move back up in the regular session would fill the gap. So we'll see what happens here at the open. But I think the thing to be learned here is that when one side of a balance area on a larger time frame area, like we've seen here, almost 2 months, 3 months, when one side fails, like I told you before, we've seen this over and over and over, that you will see the other side of it tested, because they run right straight through. And it didn't take long, did it? Didn't take long. By day number 3, you're thinking, oh my gosh, this is actually going to make it there, isn't it? Then you get a pullback. Well, maybe it won't. Then you get a gap up, and 3 days later, you're right up into it. Would have been a tremendous opportunity using some sort of a call option play. You would have not taken any heat at all on that. Once you got up through the 1157s, you could put your stops underneath that, and then the last 5 days was just gravy on top of whatever else you already had in that particular play. So We'll be watching, like I said this morning, seeing what we get. We got some producer price index coming out at 8:30 this morning, so that's going to play into also, if we make a lower low. But 91.50 right now is the monthly point of control, and that's going to be key for us because I want to see if this is going to hold above it or not, or is it going to fail and open up the door for us to go down to the 11.57 area. Have a good trading day, everyone. We'll see you in the room.